Good morning, everyone. I'd like to warmly welcome you to this morning's webinar session hosted in collaboration with EDF Energy. First, as a quick introduction for those joining us for the first time, I'm Robin Hale, MEUC. We are the Major Energy Users Council, a platform for energy and water professionals within the UK, empowering corporate member organisations across various sectors and with comprehensive knowledge, advocacy, representation, and collaborative opportunities. Today, we're going to delve into the complex and crucial topic of on-site and off-site renewable solutions. I'm pleased to now hand over to David Hall of EDF Business Solutions, who will lead us through today's insightful session. Thank you, and over to you, David.
Thanks, Robin, and hi, everybody. Good morning. Thanks ever so much for giving up your time for what we hope will be an interesting session today, focusing on-site and off-site renewable solutions. So I guess the first thing to note, you probably noticed two logos down the bottom. So I'll be a host for today, and I work in EDF Business Solutions, but we're also joined by Ed from our SAS Energy team that's focused on the on-site implementation of renewable energy. So just to give you a bit of a feel for what we're here to cover today, we're going to take you through an understanding of on-site solar and also off-site solutions and how they compare and contrast. We're going to really take a look into the considerations that you need to be thinking about for your business when considering either or both of these solutions, how both of these solutions can contribute to sustainability goals, and also, quite importantly, how the solutions could enhance resilience, both from market volatility and being able to effectively provide a long-term hedge and also hedge against REGO pricing. And we'll try and keep the slide content to 45 minutes to leave 15 minutes at the end. But if there's anything just puzzling you as we go through the slides, please do raise your hand, put a question in the chat, and we'll answer it right away rather than wait until the end. So maybe I'll do a quick introduction here, because I know the next slide is introducing the business area, when Ross and Ed can probably say a little bit more about themselves. But for me, I work in our large business team within EDF Business Solutions, looking after large strategic customers who are quite active across a range of different initiatives, not just taking the sort of raw supply itself. And then you've got Ed, who is a business development manager in our renewable on-site solar team. And then you've got Ross Irvine, who's our senior manager for PPA origination and structuring within EDF Business Solutions. Maybe Ed and Ross could say a bit about the areas they work in and do probably a much better introduction than I just did for both of them.
Thank you, David. So I'm Edward Hussey, Business Development Manager for SAS Energy, which is EDF Renewables solar arm. So we look after the solar PV feasibility studies through to design and installation for on-site behind-the-meter solar PV installations. We were actually acquired by EDF Renewables in September last year. And we've worked with EDF Renewables previous to that as well. So yeah, here to speak to you really about behind the meter and on-site solar PV solutions.
Yeah, thanks. So I'm Ross Irvine, as David mentioned. We focus on off-site solutions. So EDF Energy are the largest largest off-taker of renewable energy in the UK. That's a mixture of buying power for ourselves, for our own customers, or facilitating power with corporate PPAs as well. Predominantly looking at onshore wind and solar, but also hydro, energy from waste, and newer technologies like that as well.
Thanks both. We can give a bit of an overview around the sort of 4 options that are available to corporates and customers to enable the greening of their energy sourcing. So if we start from the left of the slide, I think it's probably fair to say it gets more sophisticated, maybe a little bit more complex as you move along the right. But I think the first box you can see there is a zero carbon back supply. That's probably familiar to everybody, which is where under your supply agreement there's a matching process that takes place for REGOs, and these are purchased and matched against your megawatt hour consumption. And it's normal to sort of specify the source in so much as it can be either sourced from nuclear or it can be sourced from renewable. You move into the next section of the slide, which is select renewables. So the principles are very much the same, but where it gets more interesting in this space is, let's say there's a particular renewable asset that's of interest. It could be for locational reasons, let's say. Then what can happen under this product is specific REGOs from that asset can be matched against the customer's demand. So there's traceability to that specific asset itself. If we move over to the next box, this is where we get into the sort of physical CPPA space, which is going to be one of the main focus areas for this discussion. If I can hand over to Ross, if you're happy to talk through this, Ross.
Yeah, certainly. It's fair to say there's many aspects of a physical corporate PPA. There's a few different structures in the market out there, but predominantly how it works is there's a agreement either directly or indirectly between the corporate and the renewable site. Tends to be a new renewable site, and we can get into those reasons a bit later on. But that sets out what the price per megawatt hour has produced that the corporate is willing to pay the generator. That power then actually flows on to a supplier who does firming services for that power. By that I mean we buy the pay-to-produce power from the site, pay them the per megawatt hour price agreed between the corporate and the generator. We then do balancing and shaping, turn that intermittent power into baseload blocks that you'd be more familiar with in your supply agreement. And then we sleeve that power into the supply agreement of the corporate, charging them the per megawatt hour we've paid to the renewable site and the costs of doing that firming service and the sleeving service. They're normally, as I said, longer term agreements. That's because to get longer term price fixing or to get sites interested, they tend to have to be for 15 years. That allows the site to get built, to reach its final investment decision, get out the ground, and become an additional source of renewable energy in the UK. They can be for longer term. They can be up 20 years, 25 years. They can also be for shorter term. That's mostly in the case of operational sites. It doesn't come with that additionality headline that some people like to target. Because they're 15-year agreements, I mentioned the fact that the power is sleeved into the supply agreement of the end user. It might be that there's a firming counterparty in the mix, taking that power for yourselves for a longer duration to match that 15-year tenor of your agreement with the generator, but you will not be with the same supplier for 15 years. You might switch at some point during that duration. So we like to make them portable, and many suppliers are trying to make them more portable in the market, which means that you don't have to have the same counterparty doing those firming services as your current incumbent supplier. They can get the power to your incumbent supplier via GTMA trades, transferring the power to your supplier, who will then sleeve the power into the supply agreement. That's predominantly an overview of how they work. Over to you, Ed.
So on-site generation is probably easier and slightly more simpler to install. Obviously, the renewable technology is actually installed on your site, so you'll benefit from the generation directly feeding into your electrical infrastructure and using that power straight away. So with the PPA on site, it's a longer term investment. So it's usually about 15 to 30 year term. But obviously, as soon as the system's generating, you are benefiting from that cost saving. There's also client funded options as well, if you wanted to pay for the system directly, to actually own the system. And again, with return on investment for that would be something like 3 to 6 years. So yes, you see on. So yeah, that's pretty much it really with the on-site generation. You'll benefit from the generation straight away on your site. So yeah, so there's 3 different options really that we look at for solar PV installations for your site. We'll look at either a rooftop installation to see which roof space is available. We can also look at ground-mounted solar PV, and we can also look at solar carport systems. All 3 different options come with their different benefits and different constraints as well, which we'll talk about further in the discussion as well. And again, there's different development requirements for each of the different sites as well. Rooftop, you might look at structurals. So if structurals aren't suitable to actually put panels onto the roof, then that's when we then look at ground-mounted solutions and also solar carport systems. So actually delivering on-site solar PV is really straightforward. And with EDF Renewables, we actually fund, develop, construct, operate and maintain the solar PV installation through a PPA agreement. So that would actually mean there's no upfront cost with upfront capex requirement required. The system is owned by us, by EDF Renewables, but again, we would maintain that system for the whole lifespan of the system. So just to run through the process when an initial site is being looked at. So we would first look at obviously your site location, and again, this would determine whether we are looking at a rooftop installation, carport installation, or a ground mount installation. We then want to receive some further site information from yourselves, which would entail asking for your half-hourly data, which we can then review against what size solar PV system you would actually require, and how much energy you'd actually use on your site. As with a PPA agreement, you'd want to look at around about 95% usage of that solar PV system. This will allow us to then put together a full initial design, which we'll then submit obviously with our initial PPA offer. We can then send that to yourselves, and once agreed, we'd then look for to sign up to an exclusivity agreement, which will then allow us to carry out the full development of your site. So that will entail doing DNO applications, structural assessments if it's rooftop, any ground surveys if it's a ground mount or carport system, and any planning applications that's required, and also just determine any other electrical requirements needed on your site as well to connect the solar PV system. So a PPA agreement tends to run from 15 to 30-year term for on-site system, and as said before, we would own and operate the asset for the full term of the PPA. So it's guaranteed generation. As I said before, we maintain the system for the whole lifespan of the solar PV system. So again, there's no capital expenditure for yourselves, and you can see savings up to 40% on your delivered electricity unit rate, and also it replaces 30% of daytime demand with new renewables.
So yeah, what we're going to propose to do here is just dive into a little bit more detail of how the corporate PPA compares and contrasts against on-site. So I think we'll probably dwell on this slide for a few minutes, and please do shout up if there's any questions as we work along. I'll have a go at introducing each line, but then sort of defer to Ed and Ross to add a little bit of detail against each section. But the sort of headline one is in terms of cost saving and certainty. So across both corporate PPA and on-site, you have the benefit of being able to create some cost certainty against the wholesale component of the price. So liquidity is quite thin at the minute in the market. It's getting better, certainly, than it has been over the last year or two. But even with that, trying to hedge a price for 15 years is just impossible in the wholesale market. So what the corporate PPA or an on-site solution enables you to do is to hedge out a portion of that wholesale component using these solutions. An added benefit of an on-site solution over a corporate PPA solution is that because the asset is physically on your site, then non-energy costs are avoided as a consequence of that, which are making up about 40%, is probably even a little bit higher than that right now, of the total proportion of your delivered energy cost. So the added sort of complexity of having something physically installed on your site is offset by having a significant saving on the non-energy costs. But if I hand over to Ed and Ross, maybe in that order, to talk in turn a little bit more detail about those points.
Yes, so the cost savings, so obviously having an on-site generator, you're using the renewable energy first before actually taking any power from the grid. So everything that's generated is going directly into your electrical infrastructure. So you're using that generation straight away, which is then taken from the PPA rate, which is obviously considerably cheaper than the rate you're actually buying from for your energy. So yes, you're using that renewable energy first before actually taking any power from the grid initially. Yeah. Ross.
Yeah, and as David mentioned, the corporate PPA costs come in from the it's just a wholesale component, so it's not looking to change anything in the energy costs at all. You're still having to pay them because you are consuming power from the grid, but it provides a long-term hedge similar to how an on-site PPA would do. That could be a 15, 20, 25 year long-term hedge against that wholesale component of the power price. We have balancing and shaping fees on top of that, we'll discuss next, but you're fixing probably 75% of the wholesale component of that section of power when you turn it into a baseload block. Where you build off-site, you tend to build the resources in the best locations in the country for that technology. So building, wind in Scotland and sun in England, for example. But you're picking the best site locations, and you have sort of a gain from the scale of the site you have. That means that the per megawatt hour rate that you might pay for off-site supply might be cheaper than what you have on-site, but the big advantage of on-site, as we've touched on, is that no energy cost, and because it's such a big portion of the bill, that's where potentially some of the cost savings are better for on-site than they would be for off-site. And we'll talk about some of the differences between them as we go through the slide.
Excellent. And I've got a question actually for Ed and Ross, if I may. I'm just thinking, if audience members are looking into a corporate PPA or an on-site, I think it's true of both. What should they be thinking of? I'm thinking, like, in terms of the typical way in which an offer is presented. Is that normally indexed every year, or flat over the year, or different iterations of that setup? Because I've heard in my discussions of sort of falling RPI, so you can almost like front load a price and then have it falling across the horizon. I'm just thinking it might be worth talking about the way these offers are constructed.
Shall I go first? So for on-site PPAs, there are options. So we can look at the PPA rate to be fixed or linked to CPI over the term of the agreement. So I suppose it depends on each site and can also, depending on the system size and how much it's going to generate and save the site's the site's power is pulling from the grid. That's where we can run the different analysis and then send it over to the clients to actually decide how they want to proceed.
Yeah, and for off-site PPAs, when you're talking to the generators about what you'd be paying them, they're often a fixed per megawatt hour price that you would pay them, indexed to CPI in most cases. People can do flat prices, but they might price too much indexation risk in, and therefore CPI tends to be the one people transact at, even with exploring flat pricing. And then on the balancing and shaping stuff we'll come on to next, not to go into too much detail there, but essentially we're looking at how long would you want to contract the balancing and shaping services for to match off against that corporate PPA price that you're paying the generator. So you might have a 15-year agreement in the corporate PPA price and the 15-year agreement for firming services, but the shaping component is fixed for, say, the first 1 to 3 years, but it doesn't go beyond that because there's no liquid trading horizon that they've touched on before beyond the 3-year mark, which means that the supplier cannot hedge the shaping portion long term. So maximum 3 years from a shaping point of view. Balancing can be longer term and more around the 15-year range if that's required. Again, linked to CPI for those in all likelihood.
Yeah, excellent. So, and a perfect segue into balancing and shaping as well. So, I think in the corporate PPA space, as Ross mentioned earlier, there's a sort of exercise that needs to be undertaken to take the intermittent power shape that's created by the renewable asset and effectively execute a series of buy and sell trades to convert that intermittent shape into a contract block that can be sleeved into your contract to replace a block that you would normally hedge over the counter. And there's different variations of how that can be executed. And I'm sure Ross will talk about the differences between wind and solar as well. On the on-site solution, it's slightly different in so much as there's no sort of upfront exercise to manage that sequence of trades, but by having a renewable asset introduced behind the meter on your site, that then impacts a customer's shape, which will be handled via the supply contract in the usual way for any sort of shape change by the shape fee charge and the imbalance. But again, if I can hand over to Ed and Ross, maybe to just add a little bit of detail in this section.
Yeah, thanks, David. Pretty much what David said. With an on-site generation solution, it does reshape your energy consumption. So you'll be using the generated energy first, and then obviously pulling power from the grid. It's all managed by ourselves because through PPA we own the asset, so we will be doing the meter readings for what you're generating and seeing how much that solar PV system is actually generating on your site as well. But it's very straightforward, very simple as it is. Just one effective company looking after that solar PV system as well. So, yeah.
I mean, it'd be fair to say, Ed, that because of the impact to supply agreement, obviously there's no impact for the on-site because it's just a per megawatt hour rate you're charging for that.
But yeah, exactly that.
Worth considering if you're on a flat baseload contract, for example, with your supplier, how that impacts imbalance costs that might get passed through. So the equivalent of firming services on corporate PPAs, there are sort of an impact there on the supply contract doing a very similar process to manage the power from the grid.
Mm-hmm. Yes.
So when we talk about balancing and shaping, maybe we're summarising what they are. I'm sure many people on the call are aware, but shaping power is the long-term forecast for that renewable site, what we expect is generated different weeks, months, seasons for the duration of a fixed period. And the baseload block of power, we're trying to shape that volume to. You look at the time frame it's above that baseload volume and time it's below. That's called the residual, we call that. And we'll be selling excess to the market and buying shortfall from the market. That comes at a per megawatt hour cost, which we can calculate and pass on. So that's long term all the way through to, say, day ahead stage, 24 hours before. From day ahead stage onwards, that's balancing risk. What do we think the site was going to generate on that specific day at the day ahead bid to what it actually outturns at? And that produces the forecast error, the balancing costs that we can, again, take a view on either do a fixed price or a pass-through percentage basis. There's a few advantages to doing fixed price for balancing and shaping costs. Obviously, there's certainty in that, which is what many people are trying to look for in a corporate PPA. Balancing and shaping fees, firming fees, typically relate to about 25%, 20% of the overall corporate PPA cost for a block of power. The issue perhaps with a fixed price is that the suppliers are taking a view on their expected costs that they consider balancing and shaping cost might outturn at, and they're also looking at, well, what if we get that calculation wrong? Do we have to consider risks of more generation coming on or less generation coming on, them to buy or sell more power, which comes at a cost. So it's cost plus risk approach when you're doing a fixed price deal, when you're doing a potentially what referred to as a pass through or a day ahead firming structure. When you're looking at what the day ahead forecast is, you're saying you still do those buy and sell actions to convert the intermittent power into a baseload block, but you're doing it when you have far more certainty in the actual generation from the asset. Because there's more certainty, it's linked to the cost, not the cost plus risk view. Therefore, for corporates who are willing to take on that small amount of risk, there are potentially savings over that 15-year duration. That's one of the things that drive people towards the more pass-through approach for firming fees. We can facilitate both. The main differences we've touched on between, or David highlighted before, between wind and solar. They're both predictable technologies in the sense that at the day ahead stage, there's relatively small levels of imbalanced risk between what we think they'll produce and what they want. But because wind is so built up in the UK, its impact on shaping fees and the cannibalization effects it can have, the depression it can have in the power price in the UK market when we thought it was going to generate but it doesn't, or we didn't think it was going to generate and it did, is so influential in the market that shaping fees for wind, or shaping risk rather for wind, can be quite high. Therefore, because that risk is so high, we always try and encourage people to look at the pass-through approach for shaping, because there's a big difference between the cost and the risk view. It's why a lot of corporate PPAs right now are being done with solar, because there are not many suppliers comfortable with taking on long-term fixed wind risk, but are very happy to facilitate the pass-through risk approach, which we do feel would be a better product overall. In general, we tend to see customers look at a blended profile. So they might start with wind and then layer some solar on top, or start with solar and layer some wind on top. So they've got a diversified portfolio of PPA offtake where they're of that size, they can take multiple corporate PPAs. Not sure I missed anything else there, David, that we wanted to cover.
No, I think that's much appreciated, Ross. Now, I think really thorough. So I think if we move on to the green credentials themselves, I mean, typically for corporate PPAs, they tend to take place against a new build asset. So there is additionality that can be claimed by the customer, because putting in place that deal provides a route to market for that developer, allowing them to take that investment and build that asset that wouldn't have existed without that deal. And those REGOs are traceable and flow with the power. Whereas the difference with on-site solar is it's actually saving your power behind the meter as well, and of course it's a new build asset that sits on your roof or on a carport or ground mount, and therefore it is fully additional. I'm not sure, Ed, Ross, whether there's anything you want to add to that section, but these two initiatives really are pretty much the greenest of the green.
Yeah, I think you're correct, David. Like you said, it's with on-site generation, you're using the energy as it's generated, and also reducing your own energy consumption as well. So yeah, they're the two really, just for on-site generation. Yeah.
Yeah, perhaps one that we didn't cover off on the slides fully, but ties into sort of green credentials and sort of ESG benefits for them. One of the additional benefits for corporate PPA sites, because they're larger and off-site, it in most cases provide some sort of community benefit as well. So when they're building a large wind farm, they're obviously disturbing the community which is hosting that wind farm to a certain extent during the construction phase, and there's a, depending on your view, an impact beyond that point during operations from looking at the wind farm and the disruption and stuff, and the same for solar as well. So most reputable developers offer community benefit. For wind in Scotland, it's mandated, so they're offering quite substantial sums of money to the local community to invest in playgrounds, invest in education, whatever that may be that the community elect to put the money towards. That's what it goes to, and then there's also potentially opportunities for communities to actually invest in those projects as well and get a return based on the return the asset sees. So it's just additional upside for a corporate PPA that you might not have in on-site, but in terms of green credentials, nothing beats electron by electron traceability. You are supporting a off-site asset of a corporate PPA, and you're supporting getting built, and you're providing additionality, but electron by electron traceability is clearly the gold standard when you're procuring green power.
I think the next point we were due to talk about is the on-site impacts. So it's really simple in corporate PPA space because there aren't any on-site impacts because it's all off-site and remote. However, with on-site, there are impacts, and I don't know, Ed, if you want to just quickly touch on what those may be and what needs to be considered.
Yeah, got you. Yeah, again, it depends on the type of installation that's going in that we touched on before, whether it's rooftop, ground array, or carport. Start from rooftop, it tends to be disruption around obviously the lifting points to get to that roof, to get the equipment up to the roof level. And then obviously carports, obviously car parks are usually being used throughout the day. So you do have to shut down the car parks to actually do the works. So that's something that we put together as a full program of works, obviously to be confirmed and approved by the sites for the works. Obviously ground arrays is usually in a field which isn't being used, so that's probably the minimal disruption on site, I would say, for ground arrays. Obviously you're going to have a bit of traffic getting into that field to get all the equipment in. Though rooftop car parks are probably the most disrupted for installations. So, yeah.
Excellent. Fantastic, thank you for that. So I think the next point, time to implement, there's definitely a few points to dwell on here. I think it's fair to say both initiatives will take a bit of time. You're probably talking around about a couple of years in the on-site space to go through the assessments, get the approvals, and then get the system installed and operational. But you're sort of in control of that process the whole way because you're talking directly to a provider of that asset, which is working exclusively with you. I think a definite nuance to be aware of in corporate PPA space is still a long period of time. It probably takes 12, 18 months to get an agreement sourced with a generator, and also your balancing servicing agreements as well. I think a thing to just be aware of in the corporate PPA space is, whereas in on-site you're working direct with a provider, in the PPA space, certainly in the early stage, you're talking to a developer who's spent a lot of money to get a scheme marketable, who is looking for a route to market, so is more than likely going to be talking to yourself and others to try and, as quick as they can, find the route to market for that power so they can get the asset built. So it's really, really critical to be of the most interest to developers to get everything that you can ready and align things such as, have we got a risk mandate? Do we know when we want the power to flow? Do we know which type of technology we prefer, wind and solar? Have we got a particular location? There's a lot of questions that can be done up front. So when you're facing into that market, you can work quicker with the participants in it, and we can certainly help with that process. We've built a pack that we can walk people through if it's of interest. Just reach out to us after this call. But I don't know, Ed, Ross, whether you've got anything to add in that section.
Yeah, just I suppose for the time to get the project from the get-go to actually on-site installing. For on-site, we'd actually look after the whole development side. So there's obviously DNO applications we need to go through. Planning might be required if it's a ground array or carport installation. Again, structural assessments of the buildings. We may need to add some extension boards to your electrical infrastructure as well. So that obviously needs designing and approving as well to go together. So there are some timeframes obviously to run through. I think we've put them there really to get the designs completed, 3 to 6 months really, along with DNO applications, and then again for approvals a further 3 to 6 months. So we're probably looking at about a 12-month a 12-month period to actually get on site and start installation of the new solar systems. Yeah, which again, it depends on the system size as well. Obviously, it's a smaller system, the timeframes should reduce.
And then on the last two sections of the slide, we can get through these probably fairly quickly. So I think we've touched on these points already. But in terms of the commitment, I mean, contrasting against the REGO back solutions that we talked about earlier in the slide, the key difference here is these two initiatives do require a long-term commitment from the customer. So typically for corporate PPAs, you can be looking at 15 years, maybe even higher, down to as low as 10 for an additional asset. It's quite rare to go down to 10, but it does happen. There is, for assets that have already been built and operational coming out of the end of a corporate PPA, the potential to get lock-in lower than 10-year commitment. But again, there aren't that many of those assets around and available. So again, that's quite rare. And moving over to the on-site structure, you're looking at probably a minimum of 15 years there, out to as much as 30 years for an on-site solution. And then just for the sake of time, if we go down to the impacts to the supply agreement, they're fairly minimal in both cases, really. For the on-site solution, there's going to be a minor amendment that's needed just to allow the sleeve of the PPA block into the supply agreement. And then for the on-site solution, there's no contractual amendment required, but just be aware that having a intermittent asset on your site will just affect your shape, which will be handled as it would be with any demand fluctuation via the shape and imbalance charges in the supply contracts. Just to sort of highlight here, we've talked about PPA solutions and solar PV as sort of core to our EBS business solutions area, but we also have a metering and data services division within our EBS team. And then working with our partner companies, we can also look at carbon offsetting and electric vehicle solutions, amongst other things, such as we've got a business, Hynamics, looking at hydrogen, and also a business looking at sort of planning, carbon planning for in Urbanomy. So there's a lot of different areas that we're more than happy to speak to you about if you just want to reach out after the call. But that really wraps up the content in the slides.
I think I'd like to bring this session to a close now and thank everybody for joining us. I'd like to thank EDF Energy, David, Edward, Ross, and Penny for organising this, and all those behind the scenes that gave us this great session today. If you do have any questions later on, please get in touch. We're all here to assist with the journey that you're undertaking, and happy to follow up with those with you. So other than that, I'm going to give the last word to David, and then we'll bring the session to a close. Thank you.
Fantastic. Thanks, Robin. Yeah, just wanted to say thanks ever so much for your time and engagement today, giving up an hour of your time. Have a great rest of the week. We will come back. We will answer the questions. And if anybody wants to reach out and get in contact, then yeah, our contact details will be circulated. And please feel free. It'd be great to hear from you.